The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Boland, and I am the aggressive growth stock strategist here at Zacks, and I've got two more stocks to put on your aggressive growth radar screen, and we're going to get right to it here. The first one is Boot Barn Holdings. BOOT is the ticker. That's Boot Barn Holdings, as you can see up there. It is a Zacks rank #1 strong buy. And as almost all of these aggressive growth videos, it features a stock with a A for growth, a C for value. Normally, I like that to be a little bit lower of a score, but, you know, what can you do? We can't always have that great divergence. So let's take a look at why this stock is a Zacks rank #1. And we can see that earnings estimates have been moving up for the current year, the current fiscal year, we'll call it 2019, which ends in March. So they're just off one quarter from the rest of the regular calendar. We see the number has moved from $1.02 to $1.15 roughly 30 days ago. And then next year, you see a similar movement up of about 6 cents from 129 to 135. Of course, most of that is coming as a result of this 25% positive earnings surprise. And that's what you want to see. You want to see the company beating. They beat by 3 cents here. Obviously, the last quarter was just a meet. Nothing great about that. Nothing terrible either. And then a small beat here for the fourth quarter, the calendar fourth quarter in December there. So the earnings estimates and everything looking pretty good. Let's take a look at the chart, and we can see this is why I'm really excited about this stock. This year has everything kind of really turned around down here. So in the last quarter of last year there, after that beat, it's been just a nice, steady uptrend. Now, some of you would say like, see, that seems like the type of thing that I want to avoid because, boy, there's a chance for that thing to suddenly turn around and head that way. But it doesn't always work that way. And I think the idea here is that why this is very good to me is why this looks very good here is this earnings estimate line for 2019. It continues to move up, and it's been well above the stock on this chart here. Generally, good earnings estimates like that will pull the stock price higher because investors care about ever increasing earnings. All right, let's run ahead to our next one, and it is Universal Logistics Holdings. The ticker is ULH, Universal Logistics Holdings. This is a transport company, trucking company. It is a Zacks rank #1 strong buy, as most of these are. This one also doesn't really have the divergence that I like to see, but A in growth is what I'm always looking for. B in value is okay. Now let's just take a quick look here. You see the stock was really running through the summer here. All of a sudden we have that good earnings announcement, and then off to the races goes the stock. Let's go ahead and take a look at the earnings estimates here for this one. If we can get there. I did it. I know you have faith in me that I could make that happen. Boy, these numbers are moving up here from $1.33 to $1.88 over the last 60 days. That is a pretty big move, 55 cents, and my math is going to tell me that that's like a 43% increase, somewhere right in there. That's a big move for this year's earnings estimate. Now, if we look at next year, we can see it moves from $1.69 to $2.12. Again, that's a very, very big move. That's the type of thing that you're really interested in here. We didn't have estimates, in these two reports here, but we did have 4 quarters ago. That's a 13% positive earnings surprise. This recent beat here is the reason this really got on the radar screen. Everyone is seeing it now. It is an 87, call it 88% positive earnings surprise. Just what you want to see, in your stock here. Now, as we look at the chart, we can see that there was really a downtrend for the last couple of years on this stock right there. But boy, oh boy, as we have noticed with these stocks here, it's like the fourth quarter of 2017 was kind of the awakening for some of these things that were beaten up over time, and this thing has just, right up and away. Boy, I'm not really good at the mouse pad there, but you get the idea. The idea is that the stock has moved up here, and in short order, really touching back to new highs here in the 35 range. Now, the idea is that with this solid earnings growth, that this forward price momentum will continue. And I think that's why you want to keep both of these stocks on your aggressive growth radar screen. Well, that's it for me for this week. Be sure to join us next time when we take a look at two more stocks for your aggressive growth stock radar.